Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the July 2nd. Today's July the 2nd. It's the Thirsty Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Boy, especially if you're trading. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, well, is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I do want you to know that I'm absolutely grateful for your presence here, but much more important than that, during this next 60 days, during this next 60 minutes, and these next 60 days, I'm here to serve you. So feel free to give us a call at 877-927-6640. If you can't call in, you can go ahead and send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And, of course, inside our Tiger's Den, well, any and every ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, we got all the indices in the green. The Dow's up 238, S&P 29, NASDAQ 100, 119, Russell's up 10, semis are up 36, New York Stock Exchange 134. You've got gold is up $10, light sweet crude is up 40 cents, natural gas up 4 pennies. Lead the charge dollar-wise to the upside. It is Tesla up 86 points, Google's up 38. Shopify is up 22. Amazon is up 21. So big movers and shakers. To the downside, the shakers are Equinix. They're off $8. Wayfair's down 7. Netflix is off 6. Chipotle is down 5. But nothing really major to the downside out here. So let's begin. Let's begin with one of the questions that came in. This way I don't overlook it. And that was for Michelle. I think it was for Michelle Maybell in the Tiger's Den. And Michelle does not have a position, I believe. Is that correct? And is looking at, I want to take a look at Bank of America. So if we do take a look at Bank of America, we begin by taking a look at where's price trading in relationship to their profiles. Well, when we take a look at Bank of America, it's below the bottom of its daily box out there, Michelle, and that's not good. Not necessarily good. It's trading below support. Takes us over to the weekly. If we start to look for support here, support is down in the 1970 to 2145 level. Again, trading at 2343. And price is pulled back. It's brand new month. And in a brand new month, we've got a brand new market profile. So your longer term support out here, you don't have the charts. It would help to see the charts. Boy, oh boy, oh boy. Okay, there's the charts. Thank you, Mr. Bill. Thank you in the den. Here is the charts. So, Michelle, here you can see the daily. See price trading below the bottom of its box. Now you've got the weekly. So you look for those next level areas of support. 1970, 2145. Now we've got a brand new bullish structured monthly profile. And price is really trading right at the center. So it's trading within the area, longer term, where both buyers and sellers believe there's fair value. That's at the 2328. It's trading at 2343. So let's go look at my other charts, see what else we can find out here for Bank of America. These charts suggest that price wants to continue moving lower. Now, let's take a look at the daily time frame here. The daily time frame right now is showing a TD9 count pattern. But in order for this pattern to occur today, otherwise it'll be negated today, we won't see these numbers come Monday out here, needs to see a close below 2315. and you're 23.43. Now, if you do get a close below 23.15, you really actually need to see this trade below 23.02 because the low of a TD 9 count pattern needs to occur on bars 8, 9, or the bar following 9. So a lower low today or on Monday could set up a TD 9 count bottom. But price is below support, and it's below Stevie's red line. Now, we can see that it was a green line 2 days ago, changed colors. And what that means is, even if we do get a 9 count, we should expect, and even if we don't get a 9 count, we should expect price in that line to catch up with each other. So to the extent, Michelle, that you are looking for a long trade here, and there's the potential for a bottom, you are not going to take that trade unless we see price close above Stevie's red line. If price tests that and rejects that, its message is that price wants to move to lower ground. And then we just simply come back to the weekly time frame out here. We get back to that 21.45-ish area out there. So I hope that helps out with regard to the message coming from Bank of America. All right, so now let's spend some time, just take a look at the general markets, get a feel for and a flair for what's going on. Let's start by taking a look at the Dow. So if we take a look at the Dow, was a nice move earlier. It's still up 1% out here, but what it's doing and what it's not doing. Well, here's what it's doing. It's got a TD9 count top. It's still in effect out there. So it's got the topping pattern, topping signal. Here, Michelle, is a perfect use of Stevie's green line. You can see how this green line, it's the oscillator unchanged line. It really helps us to understand is price rising or falling above or below the price oscillator. And in this case here, it's a falling price oscillator above zero. So just says further retracement. Retracement to where? Well, on the cash indice, the lucky number is 24,781.84. But Stevie's green line has acted as resistance. The sell pattern is still in place out here, as solid as it can be, especially with the NASDAQ in its wave of creative destruction. What does wave of creative destruction mean? Well, we go through this cycle across the world periodically. We went from, if you just go back, we had the horse and buggies. What put the horse and buggy out of business? Well, the cars, right? That was a creative wave of destruction. Nothing against horses and buggies out there, but that was a creative wave of destruction. We had the steamships. What impacted them? Well, it was rails. So what impacted rails? It was automobiles, right? So you've got this. What's in? So we always have these. We don't always. Periodically, we go through these waves of creative destruction, and that's really what the pandemic here, like the actions of the governments across the globe. God, they're idiots. Sorry, I didn't mean to say. Oh, no, I did mean to say that. I just didn't mean to say it to you. So it's a result of that. That's sped up what we've seen. That's why the NASDAQ is doing what it's doing, but it's why all the other indices aren't out there. So the NASDAQ is its own animal out there, and it is a strong one, and is the reason why I've said do not short the NASDAQ. Yes, it's going to pull back with the other markets as well, but that's not the area that you want to be short. The Dow is one example. Another example would be the Russell 2000. If we take a look at the Russell 2000, here's what we're going to see on its cash indice. We're going to see the Gartley sell pattern. What has it done today? Well, so far, all it's doing is testing Stevie's green line. Now, because it's green, it just says, hey, there could be just simply a retracement, and that's a possibility out here. And so when we take a look at those retracements, what you and I want to really rely upon is our TAS market profiles for the equity futures contracts. So in the case of the Russell 2000, its change in trend signal would occur with another close, with a close below 1379. Inside the Dow equity future contract, YM is the ticker symbol there. You'd be looking for a close below 25,058. No Stevie's green line, and sometimes it's red. And I teach you that if you become a subscriber of Mastering Probability. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has just launched their July 4th Tiger Dollar sale. For 1 week only, we've doubled all the bonuses where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good on all TFNN newsletters, webinars, and trading services and never expire. For all the details and to get your Tiger Dollars before this sale ends Monday, July 6th, visit the front page of TFNN.com today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So just to finish off the indices, and we could go through each of them. We won't do that unless we just simply don't have anything else to take a look at. But so far, we've got about five questions in the queue. With regard to the NASDAQ, we're still – now, this did form a wave number 7. That was letter G, and a Rhodes momentum indicator signal. If price never broke through a key level of support, you can see price still rising to with less energy out here. So we'd be looking for – if the market were to end here, we'd be looking for another bearish reversal candle to confirm its potential for a top. The top is always confirmed when price starts breaking through key levels of support. We took a look at that for the Russell 2000 and the Dow Equity Future contract and the areas to be watching. Let's go to our next question. This one coming in from Dennis G. Dennis writes in, and Dennis writes in just about win for the long term. What do the charts tell us about win out here? So let's go take a look at our three profiles out here, WYNN. And Dennis, you're really interested in the daily, in the weekly and the monthly out here, but we'll certainly take a look at the daily. So as we take a look at patterns inside of win out here, we get rid of this A to B equals CD to the downside. So, what you've got is a new profile that formed last month. So the month of June, it's a bullish structured profile. And so, Dennis, as long as a price remains above 71.11, you're in pretty good long-term shape. So it would appear, again, just looking at this chart here, with a potential rise up to the 141.65 level. That is the top of the monthly new profile. In the case of the weekly, I don't know what some of these lines are out here. Obviously, we looked at this before in the past. Let me get rid of these. That's probably measuring a swing point. Come on. We're on the air here. Work with me. Come on, guys. What is this? There we go. Got rid of it. Okay, so now we take a look at this, Dennis. Well, we're going to have the end of the week. What you would like to see Wynn Resorts today close above 76.54. That's the top of its bearish structured profile out here. Now, Dennis, that not only do you need to see it close above it this week, but it would be next week as well. If you do, then things are looking up, that up being that 141.65 area. we have a new daily profile. It is also bearish in structure, and it formed yesterday. And the top of its profile is 76.92. So whereas we talked about 76.54 because of the weekly, we really want to see a close above 76.92. That'll give you your double geek confirmation that Win may want to continue moving further north. However, we've got to come back and take a look at Stevie's other chart out here, because there's another key area out here, and I don't want you to be faked out, Dennis, that Win has to overcome. And we just talked about this. So I love how this, how the world, how everything is happening for us versus to us. And just to carry along the conversation that you and I are having, or that I'm having with the charts, and you just happen to be listening in on this conversation, say, who is that wacky guy that is always talking to himself there? But in this case here, Win, we have the oscillator and change line, that green line that changes color, and it did change color about a half a dozen sessions ago. And when that happens, Dennis, there is a phenomena that occurs. And that phenomena is we see price and that line catch up to each other. And it's not until you see that test. Now, it's the daily time frame that you and I are looking at. It's not until you see that test will you know what the intent of buyers and sellers is. So right now, even though things look good, and even though I gave you some numbers out there, those numbers are going to be superseded by this. And this says, and it doesn't have to be today, okay? And you wouldn't sell even if it doesn't happen today. You're in this long position because of the bullish structure, well, because of the profile levels and support that you would have here. But you do need to see a close above 79. Right now it's 79.53. The number is going to go up slightly if price rises out there, but you really want to see a close above that. Then, if you get that, then, even though I gave you a figure on the monthly chart of where price is going to rise to, here what you'd be looking at is 98.15. Now, 98.15 is the resistance level established by its TD 9 count pattern out there. And long term, you really want to see those levels of resistance fail. So, Dennis, best of luck to you on that trade on Win Resorts. And I'll be pulling for you that price closes above Stevie's red line. And if it doesn't, well, then you're going to have to make some other decision, because this is in a decidedly downtrend out here. And in that A to B equals CD pattern that I originally got rid of, well, that would really potentially, that would not potentially, would still be in play out here. So best of luck with that trade. We've got Vicky in Bradenton. Vicky wants to take a look at, could this have a bottom? Your thoughts. So, Vicky, I've got no subject. Oh, UNG. There we go. Whew. Hello, Steve-O. Would you open up your eyes? So you want to take a look at UNG. Now, Vicky, in order for us to really look at UNG out here, which is trading out at 10.08, in order for me to give you any good information, well, it would require a couple things. One, I'd need to know what futures contracts are actually inside of the UNG. And I don't know that. Does anybody in the den know that off the top of their head? What is inside of UNG? I'm going to do a quick search here, see if I can come up with UNG ETF holdings out here. I'm going to see if I can pull it up here real quickly, see if we've got that. Will it give it to me out here? Come on, will it give it to me? Will it? Where is it? It's not jumping out at me, which is a bummer. So I'm just going to go to the active contract. But Vicky, we really, I don't know if the active contract, which is August, whether that's 100%, 20%, 30%. I just don't know. And you really need to know that. And looking at the UNG chart to trade natural gas is kind of futile. I hate to say it, but it is the truth. It's really the underlying instrument. Let's begin by taking a look at the underlying instrument out here. So we're going to go take a look at. Let's go take a look at the natural gas and look at the daily time frame. Let's look at all of them out here. If we look at the daily time frame, what you're going to see is wave number 7. That's letter G on my chart. You're going to see a butterfly buy pattern. So all that looks good out there. And you're going to see that prices trade above Stevie's red line, $1.64. And you really want price to stay above $1.64. But what else? And so this would suggest out here, and you're long, that you would stay long. If price were to close below $1.64, and assuming that the August contract represents the bulk of UNG, and I don't know that it does, Vicky, you've got to go test that out or check that out. But assuming that it is, then you'd be looking for a move perhaps up to $2.05, where price had recently broken down using that TD9 count. However, what we've got to really do, it's the end of the week. And we should really take a look at what the weekly chart shows us. What's the weekly chart show us? Gosh darn, not a gosh darn thing. No, that's not true. It shows us we're going to be in bar number 8, week number 8 of a TD9 count. Unfortunately, that can't be the low because it needs to be bar 8, 9, or the bar following 9. Also, on a weekly basis, we can see prices below Stevie's red line. So $1.80. That's really the number that you're looking at. That come next week, you're going to want to see price close above. Right now, you've just got an inside bar, and this says an inside bar on a weekly basis says the existing trend will continue. So be careful, because that's the message from the weekly. If we had a bullish reversal candle, this week would have been a beautiful thing, because that would have given us a confirmed Rhodes momentum indicator bottom. But we do not have that as we speak. If we go take a look at all of the other future contracts out here for natural gas, let's do this before we get to the break. Stevie can pull this up here. Where we got copper, liquid crude, natural gas. Here we go. We can take a look at now. Take a look at these descending trend lines out here, Vicky. That's another area. So be careful on that UNG trade out here. Key resistance has not failed. Steve Rhodes with TFNN. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go out to my home state, Michigan, and speak with Gary. Gary, thanks for calling. Thanks for holding. How are you doing today?
Good, Steve, and it's great to talk to you.
Thank you.
I'm looking at B2 Gold. I already have a position long-term, but I'm looking to add to it. And maybe your thoughts on that gold, Basil's comments about the gold breakout possible, to the upside. I know you've talked about it recently in your newsletter and stuff.
Okay, sure. So let's take a look at BTG, folks, B2 Gold out here. And we can see that on a daily basis, price is above the top of its profile, so that's great. But what we can see also is this week was a test and rejection so far of the top of its weekly profile. That's 575. So knowing that it couldn't bust it out, maybe you're going to see some type of a pullback. That's what, and we'll go take a look at the other charts to get a feel for that. So you're looking to add to it. We're going to go try to figure out where that pullback could take us to. From a profile standpoint, it would be on the weekly basis, it would be telling us about a level of 465 to 509. And on the daily, it would be telling us about the level of about 496 to 527. Monthly chart looks pretty good, and that price is above its profiles out there. So let's go see if on the daily time frame out here, BTG is sending us some other kind of message, like a top or something, some type of topping pattern. And voila. So when we take a look at BTG out here, this had previously topped back on May the 8th, Rhodes Momentum Indicator pattern. It confirmed that signal on May 23rd. And then, since then, what we have is a TD9 count pattern. And the high was a couple of days ago, bar number 8. And so this says, okay, there could be a top. Now, could be. The reason I say could be is not because I don't want to be firm with an answer. Could be because we have the topping signal, but price is also above support. 2 levels of support, Gary. The first level being the daily profile, the second being Stevie's green line. So the level you're going to want to first watch, right now it's printing at 551. If there's a close below that, not necessarily today, but if there's a close below 551, then that's telling you that price is likely going to pull back because of that TD9 count and test that 503 area. And it's at 503. If that holds and price is pulling back with light volume, that's where you would add to your position from a daily time frame standpoint. If price closes below 503, that's telling you there's something else that's going on. Probably you'll see that in the markets before that occurs, but not a guarantee of that. But that's what I would be looking at when I take a look at the daily time frame. Now, I want to go take a look at the weekly, but I know that this chart here doesn't have the full update. Oh no, it does. Does it? Yeah, it does. Okay, good. So I think we're pretty good out here with BTG. So on the weekly time frame, we know it hit resistance. We're just looking to see, is there any other kind of, oh, geez. There is another topping signal out here, and it's called wave number, you mentioned Basil's name, it's called wave number 7. And that is the letter G on my screen out here. So it says be careful, but that's all. It's just a be careful signal at this stage. So any questions thus far?
No, you covered that pretty good.
Okay.
I'm
so
just curious
average,
on gold itself.
Yeah, your average true range on BTG over the last 10 days has been 25 cents. So you may consider an adjusted stop, 25 cents times some Fibonacci expansion number, and then go from there. So with regard to gold, let's go take a look at gold. Is it breaking out? Is it not breaking out? That's really the question out here. In order for it to break out, it's got to break out of this consolidation, because that's what we're really talking about. And it looks like at this stage, I don't know the answer to that question. Now, why don't I know the answer to that question? Because very similar to like BTG, so it's not unusual, Gary, that we're getting the same message here in gold that we just got in that stock, which is price is really between support and resistance. Now, you can see that price is basically right now at the top of its consolidation. Yesterday, or the day before, we saw close above it, and then yesterday back down below it. In order for a breakout to occur, I need to see 2 closes above resistance in a row, consecutive closes. That just increases the odds that it wasn't just a one-hit wonder. It doesn't guarantee it, but boy, it sure helps to increase that. So right now we're really trading up at the top of that consolidation, but above Stevie's green line. And therefore, I don't have a real clear signal here of a breakout on the daily time frame for gold. If I go down one level, so for me, Gary, that's going from the daily to a 5-hour time frame chart, just to get a feel for signals here. Well, here we can see the clear Rhodes Momentum Indicator top out here. And that occurred, you see the bearish engulfing candle, and price moved lower. I don't have the sign of any bottom, but the bounce is right up into Stevie's green line. I mean, it's sitting right at it right now at 1789.50 out here. And so if this is just a small counter trend rally on a 5-hour chart inside of gold, there's going to be an A to B equals CD to the downside, and this high could be that C point. Don't know. But that's the current message of the 5-hour time frame chart out there. And if I go down to something much smaller, what would much smaller? Let's say 30-minute time frame chart here for gold. What do I have? I don't have much. I don't have anything that offers me any more information. So what questions do you have that I can answer for you now?
No, you gave me some targets, and you told me basically we're still in a holding pattern. So that's what I kind of needed to know. So I'm going to hold myself and hold back that. Thanks to you.
Perfect. Okay.
Thanks so much.
That sounds good. Yeah, go ahead.
Safe forth for you and your loved ones. Bye-bye.
Hey, and you too as well. Thanks so much. That was Gary in Michigan. Let's go to Jeff in New Jersey. Jeff, thanks for calling. Thanks for holding. How are you doing this afternoon?
Hi, doing well. Thanks for letting me continue my question from yesterday.
Of course.
So
this is your show, not mine.
This is my show?
Absolutely. Yeah, I do this hour for you, for guys for guys and gals like you. I mean, to the extent that I can impart some knowledge or some tools that might be able to help you, and then you might be able to help somebody else. I mean, that's what we're all here for. It's to help each other. So, and I'm glad you called back. So really more so kudos to you for actually taking the effort and the time and the energy to call back. So and we're into the very end of the close yesterday. And in essence, if I recall the question correctly, you have a pattern that you trade that has
Steve, I'm sorry. If I can interrupt, I'd actually like to change my question a little bit.
Okay.
Okay, thanks. And by the way, I enjoy helping people also. In fact, I keep a blog about my trades for more junior traders. I don't even have it monetized in any way, but I just put it up there so that others can learn from what I've learned already. So what I'd like to learn is, so let's say that there's a pattern that's been around for months, and you see it like maybe 3-4 times a week. It's been around for months, and then it's not that pattern fails more often. It's that the pattern actually disappears. Like you don't even see the pattern anymore. And my question is, what is the probability that pattern will reappear at some point in the future?
Well, I have no idea because I don't know the pattern. I don't know anything about the so-called pattern it is that you're trading. And
I can tell you, it's pretty simple. It's kind of a modified Elliott wave. It's just like a 3 drives pattern. Very similar to a 3 drives pattern, and that was prevalent on the YM contract for months. And now I'm just at some point during the volatility from the COVID-19 virus, it just disappeared, and I kept waiting, and I was doing other trades, but I was waiting for my favorite pattern to assert itself, and it just hasn't in a very long time. So I'm just wondering, patterns that were strong that just disappear and never come back, or do you?
We'll be right back. We'll be right back. So stay on hold, please.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has just launched their July 4th Tiger Dollar sale. For 1 week only, we've doubled all the bonuses where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good on all TFNN newsletters, webinars, and trading services and never expire. For all the details and to get your Tiger Dollars before this sale ends Monday, July 6th, visit the front page of TFNN.com today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're on the line with Gary in New Jersey, and we're just discussing patterns. He's got a pattern, he says, similar to a 3 drive to a top or 3 drive to a bottom pattern, Gary. And because of that, I thought it would be worthwhile for us to go take a look at the QQQ series. This way we're going to try to project a 3 drive to a top pattern. Now, 3 drive patterns just don't happen that often. Now, when I say that often, I mean they're very particular. They're very symmetrical. I watch a lot of people try to force that pattern. I'm not saying you are, but because we're going to talk about it, I don't want anybody to try to force that. Now, 3 drives mean you're taking a look at the first drive is going to be, in this case here, let's say 3 drive to a top. And so you're looking for, well, where might the first high have occurred? Basically, the market's going to do all the work for us. We just have to identify it. So for a potential 3 drive to a top pattern, that could be setting up in the Qs out here. The first drive was June 10th. The second drive, or the second high, was June 23rd, and it needs to be a Fibonacci expansion of the last set of swing points. What does that mean, Steve-O? Well, here I'll show you the swing points that we're going to use. Let me get my expansion tool, make sure I'm set on expansion. I think I am. Yep, we are. And so what we would be using is the swing points. The swing points would be, in essence, the high from drive number 1 down to the low that it established. You'd like to see like about a 1.272 expansion. So the Qs got very close to that. That price objective would have been 252.26. It got up to 251.15. So, a little bit more than $1 away. I'm going to say that's okay for this situation. The other thing that we need to see is we need to see time spacing. And if we take a look at time spacing, it was 9 bars between drive 1 and drive 2. That says that it should be 9 bars between drive 2 and drive 3. Well, as we take a look at that, that would occur out here on July 7th. Gary, I don't know what when Monday, when we come back to work, is that the 7th? Is that the 6th? They would say it's 6th or the 7th. So, but I can share with you that the 3 drive to a top pattern, if it is going to form in the Qs, basically should occur around July 7th of next week. The other thing is we take a look at a Fibonacci expansion. We're just simply using now the expansion of the swing points from drive number 2 to the low that it made. That gives us a price objective of between 254.90 and 259.68. Now, even if this occurs out here, what we need to see is a bearish reversal candle. We've got to see a bearish reversal candle to confirm the pattern. So with regard to 3 drive patterns out there, Gary, and it works this way, whether it's an A to B equals CD, which can set up a Gartley buy or sell, or can set up a butterfly pattern. What really needs to What really needs to occur out there is you want to get confirmation. That would require that bearish reversal candle. Now, I don't know if you use bullish or bearish reversal candles to confirm your patterns. You're mentioning it's just disappeared, and I don't know how to explain that. I just don't, if you were saying it's like a 3-drive, I'll say 3 drives don't always appear that often. And has it disappeared on everything? In other words, if you put over the NASDAQ or some other instruments or currencies, or does it only work on just the Dow equity future contract?
It's Jeff, by the way. It's
Jeff, I'm sorry, what did I say? I'm sorry.
That's okay. You were on Gary from Michigan, I think.
I'm sorry.
That's okay.
Multitasking. Sorry.
So the 3-drive pattern. It wasn't really a rigorous 3-drive pattern or a rigorous Elliott wave. It was just two. It was a drive and then 2 pullbacks, and then it would reverse that whole 3-drive pattern. It would reverse that whole thing by half. And I was seeing that like 3 or 4 times a week on the YM contract, and I do see that currently once in a while in other instruments, but. And I know that markets change, so it's not a big surprise that a pattern that was dominant is now, absent, because I know markets change. But my question is just like in general, when a dominant pattern that occurs frequently disappears because the market's been through a huge, change to all the volatility that we've had the past few months, does it come back? Is it like a inherent feature of that instrument and will eventually come back and reassert itself after the craziness that we're having? Or once a pattern disappears, you just you may not see it again?
So the problem is that
a general question.
Yeah, no, it's Jeff. It's a great question. Unfortunately I don't have any experience with the patterns that I use or trade disappearing, so to speak. And if I'm I'm trying to listen closely to what you're saying, these patterns that you and I, or that I look at here in the show with folks like yourself each day, they've existed on every chart for any time frame that's ever been out there. Sometimes there are no patterns, yes, that are in place. But so I tell you what, here's what I'm going to ask you to do. Feel free to send me an email, steve@tfnn.com, with some of your examples. Let me just take through them. I'll take a look at them. Maybe I'll see something that can assist you, because right now I'm shooting blind here, so to speak. So just do that as a starting point. Does that sound okay?
Yeah, that's very generous. Thank you.
Yeah, no problem. So send that to me, and we'll go from there. And if it makes sense, we'll just follow up on the air, if not by email. So that's the current state of your patterns. What we'll do next. Okay, Jeff?
Okay, great. I appreciate your time and your offer,
Sure.
And I'll follow up with you. And have a great Independence Day.
Thank you. You do the same as well. And my apology for not getting the name right. Just multitasking. All right, so let's go to our next question out here. And this one coming in from, I'm not sure. Maybe Marty I'll go with, because it starts with Mark in the email out there, but that could have just totally blown that. But the question is, if we could go take a look at ticker symbol BDRY, which I believe is the bulk dry shipper ETF out here, BDRY. And the question is, what is the question? How does it look? Well, if we just take a look at the daily time frame chart, or begin with the daily, this is a beautiful thing. If price is able to close today above 787, that's the top of its daily profile. You'd want to see 2 closes above that, so you'd like to see that on Monday as well. Price above the weekly set of profiles out here, so everything looks good. It's taken on a recent swing point. This is from the trading day of June 23rd. There were 343,000 shares that exchanged hands that day. We're up to 440 right now, so price is pushing into a prior high with volume. Hasn't gotten up to that high, 824. Today's high has been 818. So what this suggests to us is that at least that 824 level is going to get tested. Maybe it's going to get taken out. Maybe that's going to create an A to B equals C to the upside. What I want to do is bring over my other charts out here. And it doesn't have today's data on there, so it is trading above Stevie's green line right now. You'd really like to see this close above that high because there was a Rhodes momentum indicator topping signal that came out here on June the 24th. So a close above the high from June 23rd would be real nice. And Stevie's green line, no, different green line, the TD9 count looks like that's at 793, 741. Let me pull this back here. 793 is another level that we'd like to see price close above. This is Steve Rhodes with TFNN. We'll finish off BDRY. I'll take a look at the long-term charts, see if there's anything else out there, and report back to you when we get done with this commercial. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So in the case of BDRY, we don't have anything else to reveal to you, and what you're really looking for is for this to close above the level of 824. Not likely to do today, but we like the volume behind this moving into that swing point. So I would stay put out here. Next question. This one came in from from Craig. And Craig was asking about the GDX or the Qs. I've already covered gold, and we really covered the Qs too, but here I just want to come back to it. So here's the setup. This is courtesy of Jeff, because we're looking at potentially a 3 drive to a top in the Qs, and we're looking for that pattern to complete on whatever day July the 7th is. And then follow up with either a bearish reversal candle on that day or the following session And that price projection right now could be 254, but it could also be the 259 level. If I take a look at the NQ out here on a monthly basis, this is a longer term, but we can see that this is in between its monthly horizontal trading range levels, as well as a larger Fibonacci expansion of a set of swing points that could take it up to the 10,615, 10,734 area. Alex wants to take a look at Alibaba. So let's go take a look at it. I'm just going to pull over my other chart since we really are almost out of time out here. And I think you're still in it. I didn't have a chance to read the question fully. But with regard to Alibaba, on the daily charts out here, you've just got, well, let me come back because I don't think this does not have today's data. Sorry about that. I forgot about that. So let's get this out here. The question is Alibaba trading above the top of its daily profile? Don't know the answer to that. No. So your next resistance level, I don't see any reason to sell. But your next resistance level out here is going to be 226.50. That's a bearish structured daily profile, and you definitely want to see a close above that. So, folks, that's the end of the show. Thanks so much for being here this week. Obviously, markets are closed tomorrow and celebrating our July 4th holiday, so I hope you have a safe holiday and spend it outdoors. But if you're in South Florida, you can't spend it on the beach. Actually, come join me. A little protest. We'll be on the beach all weekend long. Folks, have a terrific holiday, and we'll look forward to seeing you on Monday. Take care.